1 million the average, but the average is the average. The estimates are all over the place. Where are you at?
Yeah, the average people are all over the place, which makes a lot of sense, just given where we are. There's so much data that are coming in on a regular basis that it is sometimes conflicting. Like a great example would be if you look at the claims data, the continuing claims data, and you have to obviously look at it survey week to survey week. And what we saw there was an absolutely gargantuan improvement. And so for us, when we make a sort of an adjustment to that number, we're looking for 1.1 million. But look, Brian, one of the things we've been saying to people is, I think that there's a big neutral range on this number, right? So I think, speaking with some clients over the last few days, I think people are sort of braced for anything between 800,000 and roughly 1.1 million, 1.2 million. So I think there's a lot of asymmetry with this number. In other words, if you do come into this neutral range, I think it elicits minimal reaction. If you come just north of that range, I think that probably also elicits only a modest reaction. I think the real reaction function here is if you print something less than, say, 800,000. I think that's where the asymmetry sits.
If we get a very low number, Tom, okay, there is going to be the cries because we know the underlying economy is booming. I spoke with a truck broker friend of mine yesterday. Usually a truckload is about $2.50 a mile for his market. He's now, or his customers are now having to pay $7 to $8 a mile. The economy is booming. If we come in below 800, is it a sign that simply people aren't working? Because we know the economy is doing well.
Yeah, I mean, look, it's hard to make the argument that people aren't working at 800,000 people being churned out on a monthly basis. No, I think that there are supply constraints, and I think that's what your friend is highlighting. I mean, look, by the way, this is not unique to what your friend is saying. It's anywhere you want to see it, and it's anywhere you want to see it in the data. The small business survey has been lamenting the inability to hire people. The Beige Book, the Fed's Beige Book, has been saying the same thing. The ISM reports, right? We got 2 of them this week, have also been saying the same thing. So I think this supply constraint is real. It's funny. When we talk about supply constraints, we're all talking about, the supply chain and, we're having a hard time getting, sort of certain inputs, et cetera. I think that the supply chain obviously also is inclusive of labor and people, and it's becoming rather acute.
Yeah, I will quote the president. Humans are infrastructure, right? I mean, paraphrasing. Tom, there are restaurants near me shutting down because they can't get employees. And it's not just because of enhanced unemployment benefits. That probably plays into it. If the schools are closed, you can't go to work. If you're high risk or afraid of COVID, you may not go to work. The New York Times, by the way, did a story on this yesterday. There's sort of a ton of reasons. And is that going to be the ability or the willingness to go back to work? Is that going to be maybe the greatest risk to the ultimate recovery?
Yeah, so it certainly could be. I think what we have to keep in mind is in the United States right now we have 7 million job openings. Think about that, right? We're just coming out of this massive pandemic. The economy's turning on. We have 7 million job openings. And by the way, it shouldn't be lost on anyone that the number of jobs that we've lost today versus, sort of February of 20 is around 8 million jobs, right? So in theory, we shouldn't have any, at best we could have 1 million job openings, right? I mean, if we were basically able to employ all these people. So there's an impediment in the way. And look, I think hopefully reasonable people can have a discussion, not an argument, a discussion about what those impediments are. But the reality is that there are a heck of a lot of job openings right now. And as a result, we are starting to see this wage pressure building. Again, I know that sounds perverse for some people, but it's in the data. You can see it. The sort of the inability for companies to pull people into these jobs is now creating wage pressure here at 6% unemployment. I think things just will continue to sort of press in that direction. And this whole idea of inflationary pressure, we think it's real. I think it's, this whole notion of it being transitory, I think the Fed is going to wind up being wrong on that.
Shepard Smith here. Thanks for watching CNBC on YouTube.